Well, hello everyone. It's Robert Brokamp, Senior Advisor for the Motley Fool's Rule Your Retirement Service. And we're back with another episode of Ask a Fool. Today's question comes from Roland. What kind of stocks do you think are good to put in a Coverdell Education Savings Account? Which is the best option? Growth, value, dividend growth, a mixture, or something else? So first of all, let's make it clear what a Coverdell Education Savings Account is. It's actually named after Paul Coverdell, who was a senator from Georgia. Let's contrast Coverdell with a 529 savings account, which is another popular way of saving for college. Both grow tax-free as long as the money is used for qualified higher education expenses. One of the benefits of the Coverdell is actually can be used for secondary school expenses, a private high school, something like that. One of the benefits of the 529 savings account is that the contribution limit is much higher, generally in the hundreds of thousands of dollars. The Coverdell, unfortunately, has a contribution limit of only $2,000, and there's some income restrictions to who can contribute. One of the differences between the two accounts also is that with a 529 savings account, you can only invest in the mutual funds that are offered by the account. With a Coverdell, however, you can invest in individual stocks, and that's really the question Roland has for us today. There's no definitive answer. I would point out, however, that when you're saving for college, your time frame can be relatively short. I mean, if you are investing for a newborn, you're talking about 18 years, and if you're investing for maybe 10 or 12, you're really getting to an investment time frame that is less than a decade. And the sooner you get to college, certainly by high school, you should start moving that account out of stocks and into cash so you can make sure that you have that money available when you need it. When you think about which stocks to invest in, that really depends on, I would say, your expertise in terms of which types of stocks you think you have the best ability to pick the winners. I would also say you would factor in volatility to a certain degree. Smaller cap companies, high growth companies, these tend to be more volatile, which means there's a greater risk that you won't have as much money as you need it. Of course, they have higher growth potential as well, so you have to balance those. Contrast those to large cap, blue chip companies, value oriented, even the dividend payers. You get that money coming in. Those tend to be less volatile. Of course, there's always exceptions. You can think of the bank stocks, for example, in 2008. But as an asset class, they tend to be less volatile. So I would balance those factors out, your skills, your inclinations, as well as volatility, and come up with a mix that's right for you. Thanks for the question, Roland. If you have any other questions about saving for college, retirement planning, or just general investing, visit us at fool.com.